One of the themes I've been the most interested in when talking about Canada's natural resource sector and the investment opportunities for us as retail investors is Canadian natural gas. It's been one of the big stories, and with LNG Canada coming online and the markets of the Pacific opening up to so many Canadian companies, it looks like it might be a really interesting opportunity to start investing in some of the really high quality producers of Canadian LNG. Today's video is going to be all about a company called Peyto. They're Canada's lowest cost producer of liquefied natural gas, and they might be one of the best opportunities to buy low during a period of instability. Welcome to Golden Lurch Investing. My name is Liam. Here on this channel, we talk all about investing in Canada. If that interests you, please do subscribe to the channel, like the video, it means a huge amount and costs nothing. First off, who exactly are Peyto? Well, they are a Alberta-based natural gas exploration and drilling company. But they do things just a little bit differently. And to understand that, we need to understand what exactly is Deep Basin. Now, the Alberta Deep Basin, like the name suggests, is in Alberta, and it's actually just on the northeastern side of the Rocky Mountains, which separate Alberta from British Columbia and the Pacific coast. Because of some unique properties, this area has a really high recovery chance of natural gas, and it also has a really interesting formation which allows natural gas to be recovered at many different levels, hence the idea deep basin. This means that for every well that Peyto drills, they're able to extract more natural gas than they would in many other areas. This is one of the key things that has led to them being, like I said, Canada's lowest cost natural gas producer. Their low cost has always been a really strong element that has allowed them to generate great cash flows. But one of the interesting things is that they've also now begun expanding in this region. They've purchased and acquired other companies and other lands on which they expect to be able to do the same kind of drilling at the same premium profit level. That means that they're able to buy area, they're able to expand their operation and stay just as profitable. Now, what exactly is the technology that has allowed this to happen? Like in so much of North America, of course, we are talking about fractured horizontal drilling, what is commonly called fracking. The same idea works incredibly well here, and that's just on the reserves that Peyto has been able to prove. Now, the idea behind my investment and behind the reason why I think this company is giving us a great opportunity is that their technology and their expertise can be expanded to a much larger area than they're currently working on. There is also, of course, the increased demand for Canadian natural gas. Just look at the global natural gas markets. With all sorts of geopolitical tension happening in Europe, in the Middle East, in Asia, Canada is sitting here on a wealth of resource. And natural gas is one of the few resources that is almost universally needed right now. With LNG Canada coming online, and just like with what has happened in the oil markets, with that ability to export Canadian natural gas at a higher profit level because of the cheaper transport, companies like Peyto are going to get a higher price for every barrel equivalent of natural gas. They're going to be able to ship more of it. They're going to be able to do it more profitably. Now, why would I be buying a company like this right now? Obviously, if this story is already going on, you would expect that it'd be priced in. The thing is, I think because of the current instability in the Canadian market, because of the current sort of question marks around companies like this, of how exactly they're going to navigate the challenges of the next year or so, there's going to be some good buying opportunities. Am I saying I'm going to throw a huge chunk of money in today? Maybe not. But there are going to be opportunities in the not so distant future. And because these guys can produce natural gas at the lowest cost possible, or at least the lowest cost currently achievable commercially, I believe that they are probably the horse to bet on in this race. There are other companies that are larger and might have bigger expansion opportunity that might be able to grow faster. But these guys They know exactly what they're doing. They have found a great technique in a great area that they have developed commercially at an incredibly profitable level. They offer amazing dividends, which are just amazing for my portfolio building style and for lots and lots of other investors. And because everything they do is so focused on that profit margin, I feel comfortable holding on to this company for the long run. They are not going to suffer the same way other companies that maybe are more sensitive to price changes could if things go wrong for the next year or so. Instead, I seriously believe these guys could make it through basically whatever challenges come their way for at least the next 12 months. Now, the other story here that is interesting to me as a dividend growth investor is their compounded annual growth rate of their dividend. It is insane. It was somewhere in the range of 200% the last time I checked. That is almost impossible to continue. I sincerely, like, as much as I would love for it to be true, it's almost impossible for them to be able to compound at hundreds of percent. But it shows that they're committed to increasing this dividend. And again, these guys are the most profitable producer of Canadian natural gas. If there's anybody that's going to be a pure dividend play in the not so distant future, it's likely to be Peyto. These are the number of reasons why I think this is probably an interesting investment, why I think it probably fits with my personal portfolio. It fits with the theses I've described on the channel here of believing in the Canadian resource industry and wanting to invest now, or at least dollar cost average over the next year, while things are still up in the air before we see things start turning in the direction I believe they will turn, which of course is positive, with more opportunity for these companies. If you agree or if you disagree, let me know in the comments down below. If you think that I've missed something with this company, if you know something I don't, I would love to hear it. Like always, this channel is all about investing in Canada, and me, like everyone else, is still learning about these companies, and there's always things I might not know. So again, if you know something I don't, if you even just have a thought, another company you'd like me to look into, please drop that in the comments down below. This video was a suggestion from a commenter, and I just love it when you guys introduce interesting companies to me that really do fit with my portfolio style. So thank you guys again. Drop a comment down below, and I will see you in the next video.